Hey there, this is Christian Rogers bringing you your June Manhattan market update. And we are fully into summer, and let's get right into the data. Here's our market snapshot, which shows us that on a monthly basis, we are essentially flat in terms of contracts being signed. On a weekly basis, we're actually down significantly, down about 18%. But really what we're seeing now is the moment where people go on pause, go on vacation, do what they need to do for a month or so, and then look to come back in the fall. Interestingly, on this data, there's this liquidity chart right here, which shows us general liquidity in the market. And what's quite notable about this is that right at the beginning of April, I think 11th or 4th, right here was the time where we hit peak liquidity, and we've come straight into the neutral zone from there. So this is where there was a lot of activity really coming off of the back of a very active March. Typically what we'll see is two peaks of liquidity during the springtime. So this year is a little different, and you see it here on the monthly contract charts. Here is basically March contracts that come all the way down to June, here all the way on the right-hand side of the chart. And typically what we'd see is we'd see a high in March, April, and then we'd see another high again in June. And we didn't see that this year. And that's notably because of the macro environment. One of the most interesting divergences we're seeing is that at the very high end, so for contracts signed over $10 million, contracts signed are notably above the rolling average. So the rolling average for June is 20, where right now it's 33 contracts signed over $10 million. And what we can notice is there's been this divergence for quite some time, and we can attest to that in the market in terms of boots on the ground activity. The buyer at the lower end is much more cautious. The buyer at the high end is less cautious and potentially looking for just that lifestyle play / asset allocation. And you can see that there's been this divergence for quite some time here. One chart that I thought was interesting for a number of our owners is this, and this is a median price per square foot that shows us that really since the peak of the market, which was in 2014-15, we've essentially been flat. We're essentially flat on a price per square foot basis. Now, I say this with a huge caveat, which is each property, each location, each building, each type of property has to be assessed of its own accord. But we do have these conversations where it's like, Christian, I bought 10 years ago, surely my property is worth more. And what this is showing us is we have to be very, very careful and very analytical about each property, because on the average, on the medium rather, that's not the case. We're flat. So we'd be happy to have any of these conversations with you if you want to get more into detail about that. The climate index really just shows us that we've hit the low of the typical cycle, seasonal cycle, and what this means is that it's right now much harder for sellers to get activity. This is March over here, where this year was very active. We actually expected an equally active April, like you'd see here. March, April are above this line, and that's typically the case March, April, maybe into May, but this year no. And again, that has a lot to do with the macroeconomic factors. Supply, you'll see, has been on a constant downtrend for the last 5 years, and for lack of repeating myself over these market reports, we are significantly supply constrained. However, buyers are absolutely picky. What we're actually noticing is renovations, yes, are important, but if a renovation is older than 5, 6, 7 years old, people are feeling like they still have to do work, and they're not willing to pay a huge premium for that. So what's really moving is ultra turnkey, recently renovated properties. Everything else, buyers are looking for value. And this shows us this kind of value approach. Properties that have sold within or gone to contract in less than 60 days typically only trade at a 1 to 2% discount. Whereas if a property's been on the market for over 120 days, over 4 months, it's much closer to a 9-10% discount. And what this chart doesn't factor in, though, it doesn't factor in the selectivity of and the subjectivity of taste in terms of renovation, but we can tell you from a boots on the ground experience that even things that were, renovated 7 years ago are now being looked at as needing work. Lastly, what this shows us the optimal time to list, and this is where it becomes interesting for buyers. Obviously, March, April is optimal for sellers to be on the market, and as we trend down through June, July, August, September, not so much. There's this peak in October, that's really when our fall market gets going. So if you're a buyer now and you are able to transact, this is your opportunity right here in the summer, June, July, August, and into September. People get very busy in September, so they're not so focused on transactions, but we would urge you to think about whether it's possible to make a move now in this sort of tail end of the summer. This year, we have in November the mayoral election, which has already caused quite a bit of conversation, let's just say. So what we might find is that there's a stronger pause into November of this year. Typically in a New York market, no matter what the macro event is, if it's, let's say, negative in any way, it causes a pause rather than a correction. So that's important to note. I mean, we've been through so many different events that you'll see that yes, we may slow down, and then in November, whatever the resolution is, we actually may get a little uptick again, but remains to be seen. Lastly, I wanted to share with you where rents are, and rents are at record highs. Manhattan rents have now reached new highs, and they've broken past essentially this sort of $4,500 median rental price, and that is significant. They are only going to go higher. This has a lot to do with the FAIR Act, but this also has to do with the cost of owning currently in Manhattan. We'd be happy to get into more detail about the rental market versus the buy-sell market at any time, so feel free to reach out to us on that. So that's essentially it. Forgive us if it was a little long, but there's a lot to cover coming off of a busy spring and into the summer. And ultimately, I'm wishing you a wonderful summer, and I will check in with you in a month's time. But until then, if I don't see you in person, here's wishing you a great rest of the summer.